The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Now, we're persisting with that AI disruptive theme for our stock of the day. It's NEXTDC, of course, DeepSeek's cheaper AI model, having spooked investors, leading some to question the billions of dollars US tech giants are spending to develop AI capabilities with that massive capex. The Chinese startup claiming it took just 2 months and cost under $6 million to build an AI model using NVIDIA's less advanced H800 chips. Tech stocks losses reverberated locally with, well, we've spoken about those uranium stocks, but also you do have those data center players. NEXTDC, Goodman Group, deeply in the red. However, City analysts saying they expect the DeepSeek developments to have limited impact on near-term contracts and demand for data center names such as NEXTDC. The hyperscalers are expected to continue to need capacity to meet customers' demand. And, well, in fact, talking of CapEx, NEXTDC raising some $2 billion in gross new equity over 2024. The funds intended to invest in new data centers, particularly in Asia. So, what do our experts make of it, Luke?
For me, NEXTDC's sort of an overpriced data center stock. It's got a lot more exposure to sort of enterprise level customers than it does to sort of the hyperscale data center market, which is, dominated by those big US, international and Asian businesses. So I've been a little bit cautious on NEXTDC. It looks like a really expensive sort of data center stock when you stack it up globally. Not the, don't think it's necessarily the way you want to get exposure to that AI data growth thematic, but it's priced like it's got full exposure to it. So, not one for me at the moment, but would look at it at lower prices, but it's going to be a lot lower than $15 before I had a look at it.
Where would you be looking for exposure here locally?
I don't think we've got a lot of exposure left. We had exposure to Global Data Center Group, GDC. That had a 1% stake in the Air Trunk business, which is a hyperscale data center, but that's been now effectively taken over and wound up. So there's not a lot of exposure left, and I think that's part of why NEXTDC does trade at that premium. I don't necessarily think that's justified, and I certainly don't think that's a reason to buy the stock just because it's the only one available on the ASX. It's 2025. You've got access to every market on the planet for next to nothing. So I don't know why you'd be chasing NEXTDC when you can go and buy something from overseas with better growth prospects, better tailwinds at a lower price.
What about a little more diversified stocks such as Goodman Group?
I also think Goodman Group is overhyped on AI and data center furor. I'm really cautious on Goodman Group at these prices. Really high quality business, really well run, got some good tailwinds. Again, not sure that the current price justifies. You're certainly paying for all that in the current price.
Yeah. Okay. So if you're in NEXTDC, do you hold it?
I probably wouldn't, but I wouldn't necessarily sell it today. Maybe today's not the day to be selling. But for us, we don't hold it. And I think, like I said, we'd have to look at it at a much lower level.
All right. I'm going to call it a sell for you, but as you can point out, not today.
Yeah, maybe not today.
Francesco.
Yeah, look, a lot of investors look at this stock as a tech stock. I don't necessarily look at it as tech stock. It sits in the tech sector. I would look at more of a property trust / infrastructure stock. So I think it needs to be looked at differently by the market and valued differently by the market. You mentioned they raised some money recently. That was at around 17.15. So all those investors that took up stock at those levels is fairly underwater. So they wouldn't be too happy. Our analyst has got a positive recommendation on, but I'm not as warm to it as they are, with a valuation that's significantly higher. I won't go into that, but I'm with Luke actually. I'm more of a hold rather than a lighten. I think there's some value there, but look, I think there's some validity in data centers and this type of property. I mean, really, it's an air conditioned building, so there's not a lot to it. There's a little bit of thought process that has to go on location and sites and what's available, but really it's an air conditioned building with computers in it. the demand for data centers is going to increase. But what we see with this DeepSeek technology, that improvements in technology might mean that data storage is on a smaller device, if you like. So I'm pretty cautious. I think they're probably fully priced at the moment, but I wouldn't be selling. I'd just more of a hold.
All right, that is the view. Certainly, given what we're seeing in that AI-related space at the moment, but specifically with our stock of the day, NEXTDC.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.